Hey, so I jumped into this long position in Ace. Just want to quickly explain it. Unfortunately, I didn't have footage of any of the market scan or any of the prep work. This was just a great setup. So here we are. All right, so if we look at the price action on the left-hand side, it's been in a pretty wild bullish trend. The duration of the regime, so how long has this been trending for? More than 2 hours. Cool. How does the volume look like? It's increasing over time. Cool. And if we just look at how the market has been rewarding both longing resistance and shorting local supports, it's just been non-stop rewarding both of them, meaning the margin of error of trading both momentum longs and mean reversion longs in this kind of environment seems to be exceptionally high. So if I was to long this, I would have won. Any longs here would have won. Any of these probably would have won. These ones also would have won. All of these would have won. These ones would have won as well. The only ones which maybe would have lost are the ones here. So it's questionable whether this is a change in market conditions or whether this is an outlier before continuing to push higher. I'm betting on this just being an outlier because price hasn't actually reached any of the like major key levels before this is occurring. And mean reversion longs, if we just look at how price has reacted to local lows, pretty much every single time it has respected the low with a dip. Like every time the dip has come, it's been aggressively bought back up. So I actually jumped in after candle close above this level. Unfortunately, I got filled all the way up here due to slippage. And I've drawn a very subjective FTA over here. It's quite close to the stop loss. And the reason why I'm putting it there is I just want to have some kind of rule in place to basically reduce my slippage costs. So if I have the text written here, I'm only going to be cutting this trade if price slow bleeds against me from the entry and it reaches this FTA. So only at this point would I consider cutting the trade. So at the moment, from the point of entry, I haven't actually gone on side since entering the trade. So at the moment, if price continues to move in this direction, I'll have no other choice but simply to just cut. However, if it turns around, it goes on side for a bit and then it returns and breaks one of the levels, I'm actually okay to hold this um, just by looking at the price action on the left-hand side. If I also just take a quick little peek at BTC, the price action of this coin looks absolutely nothing like the price action of BTC, so I don't need to be worried too much about any correlated shenanigans going on. But yeah, this so far I'm not that concerned with the entry, but it isn't the greatest of starts. I would have, of course, preferred more continuation, but is what it is. Not a problem. We'll just see how this unfolds. So what I'm going to be doing is I'm going to be setting some alerts at a couple of levels. Oh, and by the way, maybe I'll just quickly show how I selected these two levels for the high time frame resistances. I'm just also going to explain this, and then I'll go and set my alerts. Okay, so where did I get this resistance from? This is a high time frame resistance. I'm going to just hop onto the 15-minute time frame. This is just from this swing high. And then for the next one's a little bit dodgy, I won't lie. I just needed something to work with, just a next resistance to work with, because I didn't really the next visible resistance level was like all the way up here. But to be honest, I'm not really that comfortable with going for like a large trade uh on this one, mainly just because a lot of the trades on the left-hand side, actually, you know what? The main reason is just because the duration of the regime is quite low. It's mainly that. I don't really like being overly aggressive on trades which only have a 2 hour regime. So yeah, there's that. If it was a much larger regime, I could at least be a little bit more confident with how much margin of error I have. But yeah, so I'm just playing it safe. I'm just playing it safe. Yeah, so this next level, I'm just gonna hop on the 5 minute to show you. I was trying to find some kind of range high to work with. Like, I just wanted something to work with because we have this big 12 level up here. We also have this resistance level. It's basically fair game to have your TP, or for me to have a TP anywhere within this range, I think is acceptable. But considering that I would prefer to just be on the conservative side on this trade rather than super duper aggressive, I'd rather TP a little bit earlier just to secure a win rather than being really ambitious and then for price to swerve the target and then it breaks structure to the downside and then I'm forced to cut the trade and experience slippage because I'm going to be exiting with the market order. So I'd much rather just get out with my limit, just play from like level and from one level to the next. Just try to catch a small move and is what it is. All right, so what I'm going to do now is I'm going to set my alerts on the next relevant levels. I'm just going to draw them out for you just to help visualize it, but I don't normally do this because I don't like having too many levels on my... Actually, you know what? If I set the alert, it's going to show this exact same line. So that defeats the purpose. Yeah, so what I can literally do is just set the alert and you'll be able to see the line. There we go. So I'm just setting an alert at the next swing low, like the next visible swing low. And I'm also going to be setting an alert at the current high of the day. And whenever price tags it, I'm going to open up the chart, take a look at the position and see or prepare for the next move. So far, it's really not looking that good. And actually, it looks like it is wanting to go down and break this next structure, which is not actually the greatest of signs. If it continues doing that and then bleeds through this level, this FTA, this one right here. Actually, you know what? I might make this one a different color just for the sake of it. There we go, purple. So yeah, if it breaches the purple line, I'm gonna have to start looking to cut. Actually, you know what I'll do? I'm not gonna pause the recording here. I'm just gonna leave it open and I'm just gonna ramble and yap uh, while the chart is printing. At least that way, some of my thoughts can just be uh, verbalized verbalized in real time. Okay, mainly the thing that I would love to see most is a break of this high. That would give me the most amount of confidence. But like so far, this isn't actually looking that good. It was like a clean initial reaction off the level, but everything after that followed, not actually looking that good. I'm just gonna throw on the the point 11 level here, just out of curiosity. All right, so it wicked the level. Let's see if it ends up closing through it. You know, it's interesting because from this high to this low, it's just a single leg. It's just a single leg. Normally, I like having oh well, actually no, there's this as well. So there's actually two legs here, and this would have been technically the FTA. Or usually I like having the first swing point as the FTA, but when things look like this, yeah, I don't know. I just give it more breathing room. I I give myself leniency to trade the setup with how I feel is most appropriate in the current context. But yeah, the price action since these highs looks very different to whatever was happening prior. Like this looks very different to whatever was happening here. This actually could be from this point. Just makes me wonder. Because this is the point where we got the highest sell volume. It was right there. Oh, those levels actually overlap. Okay, that's interesting. But yeah, it just makes me think if we got a potential regime change after this biggest volume candle, because this is the largest sell like the largest down candle on here, and it also has the largest sell volume. So it makes me the largest volume, sorry. So it makes me think perhaps profit taking is occurring, and open interest has been starting to go down ever since this point. So yeah, it actually makes sense. Actually does make sense. This might actually be good grounds for a cut and reverse. This really does look good, like fantastic for a cut and reverse. Like this might be the trade. Both of the stop loss distances are roughly the same, so I think I could actually go for it. And I'm at my FTA anyway, so I can reverse it here. Oh, I got way less size on. What's going on? I got way less size. I'm gonna have to scale in because there isn't really that much on the book. I just remember I had 100K. And then I remember the limit is also 90 on the position. That's what it was. All right, there we go. Fully in. Oh, let's throw the stop on. There we go. All right, cool. Now let's throw on the dated entry. Oh. And we're gonna have to bet on the big 0.10 level. Now I think that here's the main reason why I'm actually quite happy to reverse in this situation. Over the past, I would say 6 weeks or something like that, I have seen these small staircases. Once they start resolving themselves, like once profit taking starts occurring, it can get quite violent to the downside. And I've often seen these revert all the way back down to the origin from since the buying began. So in this kind of situation, I'm gonna be I need to like really assess with how far down I really want this to go. I have a bit of time to kind of plan this out as the trade is developing. That's very ambitious. I don't think I need to be that ambitious, to be honest. I just need to go one level to the next because yeah, I'm gonna go one level to the next. I think that's probably the most appropriate thing to do in this kind of situation. Um, this is a little bit too small, so I'm just going to go the next one, which is right here. Because again, I'm just trying to optimize for having a higher win rate, um, rather than, yeah, having a higher win rate on lower trades, rather than having my TP swerved on more trades, but the winning trades are just higher R, right? So I prefer this. I would pick, if I had to pick my poison, I would pick this. All right, let's actually set the TP. Okay, we're going to be closing this at this price, and we're going to be closing out the entire position. There we go. Oops, my bad. All right, cool. Everything is set. We got the reverse trade in place. I'm glad that at least I actually got an average entry at my FTA, like at my original FTA. So that's actually nice. And also I said I'm only going to be cutting if there is a slow bleed with no one side. I meant to probably write reverse it because this was really clean. Basically, everyone who was long from this resistance is starting to get stopped out. And I'm essentially just betting on a change of regime. So the first trade was betting on the regime not changing. So I was betting on an outlier. So what I needed to see once price hit this level was an almost immediate reclaim and for buyers to immediately start stepping in. But instead, what happened was after I got in and after I slipped the book, I was me, I was pretty much the last buyer of this move, right? So as price started going down, it made sense. It made sense to go for the reverse. And I got the entry right at the FTA. So I didn't actually get hit for the full -1R. I got out at like, what is that, 0.8? Yeah, something like 0.8. Not too shabby. So on this next trade, let's mark it out. How am I going to plan the management? How am I going to manage this? I should probably delete this, and I'll also delete this. For the context here, if I was long from here, this is just like a next level. So I just had this text written here in case that price wanted to push up to here. And if it just barely tagged this and then it started going down with a break of structure, I would consider tightening the stop loss or consider cutting. It would depend how price looked like up there. So I can delete that. All right, now let's mark out the FTA. Again, I'm going to be a little bit generous. All right, and then I'm going to be using the high of the day as the stop loss. I'm just getting all the colors nice and aesthetic. All right, cool. I'm going to stay in this one as well. I'm just going to keep rambling while this trade develops. The interesting level for me is this low from where all of that big selling came in. And it actually just got broken right here. The big 0.10 level actually got a pretty good reaction, like a pretty good initial reaction for buyers. But we'll see if this is short-lived or if people really did, in fact, want to buy the dip. But the aggression of like the willingness to buy the dip, it noticeably changed from up here. So I was betting that it would not change from up here, but that got ruthlessly invalidated. So I'm now betting that the market conditions have changed. And I'm essentially betting that the price action from this point forward, from this big selling, is now going to be different from whatever is on the left-hand side. So I could actually draw this with the ghost candles. So look at this and then compare it to that. They look vastly different. They look vastly different. So I think that there may actually be a change in market conditions. And that's why I took the bet. So yeah, let's see how this one plays out. I'm just gonna, yeah, I'm not gonna even pause. I'm just gonna let it play and see what happens. And just ramble as I go. I have a feeling we've got this one in the bag. If we look at all of the volume bars from this point, from 1714, look at, I want to bring your attention specifically to the largest points on these volume bars. Just forget about how this trade is playing out. Oh, by the way, I've got like about a grand of risk of trade. A grand of risk on these trades here. I'll show you. So in the most previous one, it was, yeah, here we go, minus 501. Oh, my bad. It's 500 of risk, not a grand. Why is that? Oh, okay. It's because the position is, okay, yeah, yeah. Oh, well, I did cut early. Okay, okay, okay. That's right, that's right. Yeah, so this specific product on this specific exchange has a limit of 90K contracts, so I couldn't actually put on more size, like I was limited. Um, but yeah, this one was minus 500. I'm assuming that yeah, this one was the same size as this. Since this one was like a point 0.8 R loss, I'm assuming the risk was like what, 600 or something like that? Yeah, probably 600. Um, the reason why I'm not so stressed about like being so hyper consistent uh with the risk per trade is because on average over like when I look at my risk per trade over the previous 300 trades, all of the small little variances in the position sizes, like sometimes it's like 10 or 20% smaller, or other times it's 10 or 20% larger than normal, which can sometimes happen when you're using market orders to get in. You're just naturally going to experience that due to slippage and also just due to lag. But yeah, it all evens out to like a fairly consistent risk per trade. So at the moment, I'm just rolling with just 2% risk per trade. Okay, yeah. What was I saying? The volume bars. Okay, so okay, look at this one. Big sell on the big volume bar, and it was a down candle. Next one. Oh, actually, no. Never mind. Okay, there we go. Okay, look at this. This is actually interesting, though. This is actually interesting. Small candle, pretty big volume. Like the size of this candle looks pretty much the same to all of the other candles on the left-hand side, right? Like the size of this looks pretty much the same as all of these. However, the volume does not look the same as all of the ones on the left-hand side, especially all of these ones, right? Especially those. So what does this tell us? It tells us that okay, so price went up, but it barely went up on a pretty big chunk of volume. That means a lot it was powering through a whole bunch of limit cells. A whole bunch of them. So someone is stacking this book with limit cells. And again here, big volume came through and slightly larger candle than the rest, and it's a down candle. It just gives me the heebie-jeebies that profit taking in large quantities is occurring. The most important thing that I want to see in this trade is a break of the 0.10 level. That's probably going to be the most important level for price to break. Also, quick tip. One of the biggest observations I have made with identifying if my trade has been invalidated early or not is being thrown offside pretty much immediately from the point of entry, and getting about 0.5 R offside fairly quickly, like within the first 5 minutes. Like within the first 5 minutes of a trade, I'm usually not halfway to the stop loss, um, with with not with only a few ticks on side. This is very abnormal to see in my winning trades. And whenever I see something that is abnormal to see in my average winning trade, this justifies me to believe that perhaps my trade really is being invalidated. And it gives me that extra confidence to pull the trigger and just admit defeat a little bit early. Unfortunately, I couldn't close out of it earlier. Yeah, you could make the argument that I could have maybe technically closed after maybe a break of this level. Maybe that would have actually been the right move, considering I barely went on side from the point of entry. That probably was the right move rather than trying to get out at the arbitrary FTA. But I'm not too mad about it because I was at least sticking to the original plan rather than um, reducing my margin of error by going to like a more adaptive type of plan. So I'm not too concerned with that. That's actually fine. That's totally fine. Like the entry here actually isn't that bad. Yeah, so that's a pretty weak reaction from the 0.10 level before price revisited. The way that you can tell that a reaction is fairly strong is if once it hits the level, it spends barely any time at the level, and then it just breaks structure without without retesting that same level again. Because this basically shows that there is so much urgency from buyers. But the fact that price is returning back to this level almost kind of looks like deja vu what happened here. And even you could argue here. Actually, no, I'm just drawing. I'm just, what is it called? Curve fitting? Yeah, curve fitting. Ignore that. But yeah, the point is that if this really was super duper bullish, probably would have bounced up this 0.10 level already. And again, I want to bring your attention to the price action before this yellow line and after this yellow line and compare it. This looks very different to that, especially if I drew a yellow line like here. That looks like a clean grind to the downside. But yeah, the point is this price action looks very different to the left, and it gives me a good reason to believe that the regime potentially is starting to change after this point. But we'll see what happens. We'll see what happens from here. I'm just going to throw some alerts on just to keep the habit to keep the habit going. So a red flag in this situation would be for price to return up to the highs and break through it, and then also show a break of structure after reclaiming those highs. That would be a bit of a red flag. That would probably be like worst case scenario in this type of setup. And anything that looks something like this, where we get break of structure under this Big Ten level, that would give me a lot more confidence with the trade playing out in my favor. But yeah, it's like momentum longs and both Mean-Reversion longs had such high margin of error, and then all of that just completely collapsed over here. It's just interesting that this happened before price actually reached the big 0.11 level, but is what it is. I've just seen it, like I've seen these huge like structural breaks happen like before, like slightly before price hits a level, and I just didn't have the cojones to capitalize on it. But I've just seen this time and time and time and time and time again over the past several weeks. And this is probably the cleanest example, like, this is probably the cleanest variation of how the price action could look like. It's like, yeah, sure, I had to take the L on the, like, on the initial attempt, but, I'm not really thinking in terms of immediate outcome. I'm just thinking in terms of expected value. I would still take this trade. Like, this one is still one that I'm happy to take. And cutting here, I still think it would be EV positive to cut in this region. Like, yeah, it could have been slightly optimized. Like, yeah, it could have. I'm okay with not though. Like, I'm okay with actually not jumping in here. You know what? If it top ticked this level and then it did a break of market structure, I probably would have been a lot more happy to just jump in after one candle close through like through whatever this level is. I would have been much more happy because then at least I would have the confidence that like, oh, okay, well, price hit the level, stops were tagged, breakout traders jumped in, the breakout traders are now trapped and offside, price is breaking through the FTA. There's a window here to like really jump into a whole bunch of shorts and contribute to pushing those longs even further and further offside until they are forced to puke their positions and for price to collapse. So like I would have been more confident way up there to pull the trigger early. So yeah, I think it's actually fine that I was a little bit patient and I got out a little bit later. I don't think it's that big of a deal. And the risk is smaller, like on the lower end as well. I don't mean numerically, by the way. I'm talking like in percentages. I don't want to be the one who says what is small or big. I just mean relative to the standard trade that I take. Look at how open interest looks like as well. Like since this yellow point, it's just been pretty much sloped downwards. The volume as well. The volume as well. So this gives me a little bit more confidence that, yeah, people are probably closing out. And this is just giving me a little bit more confidence that, yeah, the regime probably is changing. I was just curiously checking what BTC was doing. I'll just throw in another alert just at these highs. Oh, I'll quickly say something about the funding. So we've got funding in an hour and 30 minutes, and the size of the funding is actually quite high. It's 0.92, so it's 93 basis points. The size of my trade is 9%. So this, oh, actually no, so the funding is 0.1 R. Okay, that's actually fine. That's actually fine. I'm actually happy, like, this is not that big of a deal to pay, but, big but. If we look at the countdown is showing that it is going to be, that funding payment's going to be coming in an hour and 20 minutes, hour and 28 minutes. My average trade duration is like 45 minutes. And I usually have a maximum hold time of about 2 hours. Now, considering funding is going to be at 1 hour and 28 minutes from now, and I'm already in this trade for 27 minutes, it actually makes complete logical sense to try to wiggle my way out of the trade shortly before the funding payment comes. This is assuming that price is going absolutely nowhere and I'm stuck like within the bounds of uh, my entry. Actually, you know what? It would actually make sense to try and get out of it, even if it was near my TP. It's just another thing, just another observation. Um, when there is usually, well, I've seen this quite often. Unfortunately, I don't have the stats to tell you the percentages of how often uh, this works, but I'm just throwing an observation out there that when there's I've noticed that when there's really high negative funding, shortly before the funding payment comes out, there are a whole bunch of players who just simply don't want to pay that funding, so they simply start closing out of that position, and the act of a lot of players looking to close out of their position creates buy pressure because if you're short and you're closing, you have to buy to close out of your position. So it can sometimes lead to a little bit of a little bit of a price drifting upwards for like the final like 5 or 10 minutes before the funding payment comes out. And that can a little bit worsen the entry. And then finally, after the funding payment actually arrives, bang, there's a huge spike to the downside after all of the after a whole bunch of players now want to re-enter shorts and regain exposure to the downside after previously de-risking from the funding payment. So it's just something I've noticed. Again, don't have the stats on it, not financial advice. Do your own research. Don't trust the stats of random people online. I think it's useful to get ideas from other people online. I don't think it's useful to trust the stats of other people online. It's useful to trust your own stats. So like if someone says, oh, this specific pattern has a 73% chance of playing out correctly, it is not a wise thing to do to just blindly believe that. It would make a lot more sense for you to look at that and say, wow, that's actually a great looking stat. Let me validate it. And then you come up with a hypothesis to see how true that idea really is. You go and run your own back tests, like you go and collect your own data, your own stats, your own back tests, and you see how true it is. If it matches up and it turns out to actually be like some statistical advantage there, awesome. Awesome. If not, cool. Like if it actually turns out that it's the other way around, cool. You can exploit the other side of that. And if it in the third option, it turns out that it's EV neutral and there is no edge to be found there at all, then at least now you have that information that you need to look elsewhere. You need to go back to the drawing board. And by the way, totally normal to go back to the drawing board in most cases because edge is an outlier. So it would make logical sense that on your average idea that you test, that it doesn't actually lead to edge. It would make a lot more sense that it would be abnormal for you to find edge. It should not be normal for you to find edge. It needs to be abnormal for you to find edge. Or, well, it doesn't need to be, but at least it makes logical sense for it to be really hard and also very abnormal for you to find an edge. And the only way to counter that is with volume. Like if you increase the total number of if you increase the average number of ideas that you test per month, you for sure will increase the probability that you actually stumble upon some edge. Look at how this trade is playing out. Quite the boring one. I actually want to capture this because in my previous 2 videos, I captured good examples, great examples, where everything just so happened to play out all nice and dandy and all nice and smoothly. This one is not playing out all nice and dandy and all nice and smoothly, and I want to capture that. I think it's important to capture that and see what is the thought process and the thinking or how to manage a position that is being all wonky. And I'm glad I could capture this one because yeah, this is a cut and reverse. I don't get these often. By the way, context. One of the core conditions for me to even consider a cut and reverse on a grindy staircase like this is the look for a cut and reverse on a long is the price action on the left hand side. It has to be absurdly clean. Absurdly clean. This is very clean price action, and it meets the volume threshold as well. That's why I was fairly confident in going for the reverse. If this price action didn't look as clean on the left hand side, I definitely would not have been as confident to go for this. Wow, the average volume is like, what is that? I think it's like just barely at 100K or less now per 1 minute on Binance. And it's just like it's stuck at this 0.10 level. So I guess we're gonna have to see if it eventually ends up bleeding through it, or if we get hit with one of these, which I have also seen quite often um in these scenarios where the volume is dead and then all of a sudden it's just in like one candle. In this kind of scenario, like if this starts happening, because this literally can happen, by the way, this absolutely is a feasible thing to happen. In the event that this starts happening, I'm going to be starting to market close somewhere out here, somewhere in this region, manually close. I have a tendency to manually close just like in the region close to my stop loss. And the reason why I do this is um, it dramatically helps with reducing my average slippage per trade, because it's not that price is invalidated exactly at this level and it's not invalidated early. No, I like to think in continuums. So it's not if the trade is valid or invalid, it's rather how invalid is it, right? So for that reason, anything within this region is acceptable for me to start looking to wiggle my way out of the trade. But yeah, so far the development is actually fine. Like, it wicked the 0.10, very weak reaction. It hit the 0.10 again, an even weaker reaction. It hit the 0.10 again, an even weaker reaction. Some people like to refer to this as the classic uh, bouncy ball pattern, where the strength of the buyers just continues to get weaker and weaker and weaker until the floor collapses. One of the best examples of this was it was September 2018 when BTC was breaking the 6K floor. That was a wild time. Terribly low volatility, by the way. I remember BTC being stuck in like a 0.10% range for like an entire 24 hour window of time. And the only people that were making money were people who were market making like a 10 tick spread. So yeah, that was weird. Actually, no, there were like windows of time where BTC was literally stuck in a 1 tick spread. Like a 1 tick range, sorry. So like the size of the entire candle was like literally 1 tick. Yeah, I remember those days. Wild days. Anyone who was on BitMEX, shout out. They remember. They remember the golden BitMEX era with BitMEX overloads. The moving averages on the volume are now also starting to flip over, indicating that the volume really is starting to decrease over time since whatever happened over here. But yeah, you can see price is kind of compressing into this big 0.10 round number. So we'll have to see what kind of violent resolution comes out of this. Will it be in our favor or will it rip against us? Let's see. Call me neurotic, but like there's just something, or ADHD, I don't know. There's just something that I really enjoy with moving the chart around and briefly changing the resolution. It's like I can't keep my hand still. This is obviously not how I wanted the cut and reverse to play out. Oh, we're starting to get some sales coming in. I mean, some buys coming in. Interesting. We'll see if this ends up breaking the structure or if it ends up hitting the level, reclaiming it, and then coming all the way back down. Here's the thing that is like a little bit irking me on this trade. With the volume decreasing so dramatically, it just makes me think that, okay, well, what if we get like some kind of range established here, and then I'm gonna be forced to cut it like 0.1 or 0.2, something like that. That won't be too fun to experience. But we'll see how this one plays out. Oh, this is gonna be one of those wild runners. That's gonna be a fun one. The quicker it reclaims the level, the better. The later or the longer amount of time that it takes to reclaim the level, the worse it is. It was a pretty violent and pretty steep like initial reaction. So we'll see if this one ends up quickly reverting or if this one ends up just steamrolling. If it ends up steamrolling, then I guess you'll have a very good look into the nature of trading. What I like to call negative variance. Getting unexpected outputs. Unexpectedly unpleasant outputs. Yeah, the fact that it hasn't reclaimed the level yet isn't too nice. And it's like, yeah, it kind of did go a little bit steep into this level, but at the same time, I was market selling on the way down, like creating this candle. Getting pretty close to the FTA, not looking too good. And cutting there would make complete sense because usually when playing cut and reverses, they go like from entry, break of structure, and then either slowly chops on the way down to the TP, or it just bleeds all the way back down in a fairly clean fashion. So the way that this price action is unfolding, unfortunately, is there was compression and then bang, it goes violently up. The thing that I was saying that I would prepare for. And I also said that I am fine with looking to manually close somewhere within this region. If sellers come through right now, that would be actually quite appreciated. Because like at least then there wouldn't be a big break of structure on this big level. This is like, yeah, the levels up until these highs are the concerning ones. Oh, actually, there's actually something I'm curious about. Are there any top ticks happening up here? No, no. There's a lot of wiki action from here. It would be great if price could just reclaim this level, break structure, and then return all the way back to its origin from this big steep move. I'm just gonna have these two levels drawn to just give me a bit of a reference point for where I need to really start considering invalidation and looking to wiggle my way out of the trade. I'm also going to set the TP. I don't need to be too ambitious with it. Oh, I already have set my TP. What am I doing? Some reason I thought I didn't have my TP set. I won't lie, commentating and executing live, it is a whole different beast. There is like a new set. There's like this new dimension of like pressure and nerves, which result in an increased percentage of unforced errors or silly mistakes. Because there are more variables that I have to consider um, while doing everything. I don't usually talk out loud while I trade. Wow, that is a pretty nasty reaction. But again, I'm just sticking to my rules. I'm pretty relaxed with the outcomes of my trades. If I'm not relaxed with the outcomes of my trades, there are usually two reasons behind this. And I've noticed this not just within myself, but also with other people as well. So, reason number one, and it's quite an obvious one, which is there's simply just way too much risk on the trade. And I'm not talking numerically, I'm talking more percentage relative to net worth or percentage actually, you know what? It could be numerical. Like relative to like what the person is used to having on the line. So like if a trader has never risked more than $50 on a trade, it would make sense for them to be like very shaky when they have 500 on the trade. But if they have $500 of risk on the trade, and this is like their 1071st time of having $500 of risk on a trade, it's not the first rodeo, and taking a loss feels like nothing. But simultaneously, winning also is not invigorating or exciting. It is just clicking buttons and seeing numbers pop up on a screen. And I feel like by having this kind of indifference to the P&L is quite liberating in the sense that it makes it significantly easier to, one, not deviate from the system, and two, not be emotionally stimulated as heavily by the process. And I feel like when emotional stimulation is too high, or when it gets very high or abnormally high, with both positive and negative emotions, by the way, it it's usually in those times when I am at my greatest risk of deviating from my system. So if I'm euphoric and feeling like I'm on top of the moon, this is when I can do something silly. And also when I'm really upset or really mad, this is also when I can do something that is abnormal and not within the rules of my system. So I try to set up my trading environment and my risk profile such that the outcome of however my next 20 or 30 trades is going to play out, whatever that number is, it's not really going to affect me. Or it's unlikely to affect me. Yeah, it still can. And it still does sometimes. But just not as much. So the frequency of how often I get emotionally stimulated by trading, it's not that often. Like, yeah, I'm human. I feel FOMO. I feel impatient. It's just not that often. Like, it happens rarely. I get tilted just like everyone else. I get euphoric just like everyone else. Just maybe not as frequently. So the first thing is the frequency, and the second thing is the intensity. So, when I say intensity, I don't mean the intensity of the emotion itself. I'm rather referring to the intensity of how much damage is actually caused by that behavior. Is it like a lot of damage is caused by deviating the system, or is it just a little bit of a scratch, right? So yes, I still feel FOMO. Yes, I still feel impatience and greed and tilt and all of that because I'm a human. But one, it just doesn't happen as often from my trading. And two, when it does happen, it doesn't really affect the decision that I'm about to make or the decision making process that I use. And I think the reason for that is just the USD risk per trade. For me, I'm just very comfortable with that number, and I'm very comfortable with seeing 20, 30, 20 to 30, even like 35, 40 percent drawdowns on a 50K account. So like it's not that bothersome for me to go into like a 20K drawdown because I've just been there so many times. The first like several times, it's very irritating. And don't get me wrong, it's still irritating every time. That never goes away. It's never pleasant to lose money. I'm not a masochist, right? Um, it's just like it just doesn't get under my skin like as much as it used to, I guess. I'm just a lot more acceptant of like seeing that this is part of the game and thinking in terms of averages rather than events in isolation. So like how's my how's my skill level? So yeah, the first thing is thinking in terms of averages rather than like singular events, and the second thing is looking at meta skills rather than skills individually, or like obsessing over meta skills rather than obsessing over standard skills. So what I mean by that is like how much better did I get at learning and improving over the past 100 days? And how much better did I get at this specific skill of trading did I get? Like how much better did I get at trading over the previous 100 days? And this isn't talking strictly P&L. This is talking like strictly how much R&D have I done? And how much have I learned? And how much behavior did I change? And how many insights did I gather? How much data have I collected, right? How many ideas did I come up with? Like the controllable variables. I like to think in terms of those because at least with like measuring the controllables, I can at least know in the back of my head that if I improve the controllables, my output is going to improve as a byproduct of that. If you get, if you practice guitar 10 minutes a week and you increase that to 1 hour a day, you're probably going to get better at guitar over the next 100 days. Rather than obsessing over like the finger placement of nailing the note correctly, or how you hold the pick, or how you how you hit the string. The technicals are important, sure, but like overall, the average results that you get are a byproduct of your level of skill. Your level of skill is a byproduct of your rate of learning and how much time have you dedicated into the game. So if you want to get better at something, you can either A, increase the total number of hours that you spend on the thing, or two, how much hours you're spending on the thing remains the same, but you just get better at learning, or you increase your rate of improvement. Those are really the two levers that you can pull, at least to my knowledge. If you find more, let me know, please. But yeah, so far position is not playing out too nicely. And we've got funding in an hour, about an hour. So like, okay, I'm still happy to just sit in this position and ride it out and see what happens. Because like, I think it's fair to have conviction in a regime change over here, believing that the regime has changed. And now I would like to place bets against those who are playing the long side. Because often when there are regime changes, this is like, if we look at when the largest stop loss cascades occur, they are often correlated with regime changes. Like, first the regime changes, and it changes into like violent profit taking with which is one of the prerequisites for a stop loss cascade to occur, or liquidation cascade, same thing. And nowadays pretty much the same thing. Back in the olden days, it was actually different because like everything was done on BitMEX. So like how stop losses, like how the market behaved when stop losses were hit compared to when liquidations were triggered was actually really different. But now because everything is like turbo aggregated, it's a little bit different and it's a little bit all over the place. However, while I'm on the topic of liquidations, one thing that I'm interested in testing is liquidations in isolation versus a lot of liquidations being cascaded and like triggered simultaneously. So, okay, if there is one large liquidation and then no follow-up versus a lot of liquidations happening like consecutively, right? Or they're coming out very frequently. Is there any meaning behind that, or is it just noise? And perhaps there is correlation with this and fast spikes and these grindy staircases. Who knows? Maybe. Maybe it's just purely correlated and there's actually like nothing there. Or maybe there's something there. But yeah, it's just an idea that's just like in the big fat list of ideas. The players who are actually long from the point 10 level, this is this is actually very good for them. And not so good for me. Because these guys are pretty much onside immediately from their entry and barely went offside only by a few ticks. They went offside by a few ticks. So like longs from down here are actually doing well. It's just that longs from literally every other place are getting crushed. So if you bought this dip, hypothetically, let's say you bought this with a really wide stop, you would be offside. If you bought pretty much, I'm just going to duplicate it with another long tool just to like emphasize this. If you had a wider, for any players in this market who had a wider stop loss than me, they would all be offside, regardless of where they entered, except if they entered from this point 10 level. But apart from that, they'd all pretty much be offside. So that is like the one, that's at least one nice thing that's kind of working in my favor. Knowing that, okay, all of these longs are still offside. And there are still these stops to tag. But the prerequisite to tag them is to break the big point 10. To break this big fat level at the point 10. There's some weird price action. I gotta tell you. There's some weird price action. Still okay to stay in it though. Still okay to stay in it. Not invalidated yet. It's not looking pretty, I can tell you that. And I'm not gonna hesitate to look to close if this looks uglier. But yeah, not looking too pretty. Also not the most fun to see see this actually hit the original stop and start to turn around. Actually, one of my tilt triggers is for price to hit a stop loss, turn around, and then rip to the target. For sure, from like That is one of the most irritating scenarios. I wouldn't say it's the most, but it's definitely one of the big ones out there. I think the biggest one is when you try to withdraw your funds from an exchange and they go bankrupt. I think that's probably the most unpleasant situation to be in. A situation which is unfortunately not uncommon in the land of magical internet money, aka cryptocurrency. Rambling is so much fun. I didn't realize I could just leave a mic on and just yap and just see what comes out. It's definitely a weird experience. I'm not used to just like talking into the void like this. At least with my educational videos, I have like some kind of structure or some kind of like plan with like what I'm gonna say. I've got like a little script written. I can practice it a couple of times before I hit record. Even after I record, I have to redo it several times. Um, but yeah, speaking into the void like this with like long gaps between thinking and like just like allowing price action to unfold and just having like long moments of silence and just like when a thought spontaneously arises, I just capture it and start freestyling on it. It's definitely a unique experience. The people who stream and do this, damn, I give kudos to them. This is harder than it looks. This is harder than it looks. To like to focus on not making errors within execution and simultaneously talk over it. Like I see it, like I've seen trading YouTubers like do it all the time, and I'm like, oh yeah, whatever they're doing doesn't look that complicated. But no, actually, like putting it into practice, it's harder than it looks, and it feels awkward to have long silences before speaking, while also watching your position be in the red and knowing that other people are going to see the position in the red, and there are going to be eyeballs on you, looking at you and judging you how you manage the position. It's definitely an invigorating feeling, I must say. It's a very novel feeling. I mean, look at the slope of this volume here, of like the outlier volume. This is decreasing as well. I'm definitely leaning towards some kind of regime change here, but considering the size of the candles is dramatically decreasing, and we were really chopping around at these lows, and we started to chop around at these highs as well, makes me think perhaps we're going into some kind of mean reverting regime. Like, I really would not want this to happen. It would kind of be a little bit annoying because then I'm just going to be forced to close out somewhere at the point 10 level rather than going for a little bit further. Um, but yeah, if that does end up happening, I guess it just is what it is. At least if I can close this one somewhere on side, it's going to mitigate some of the P&L, like some of the loss from the previous trade. That's actually the whole point of a cut and reverse trade. It's not a revenge trade. That's not what it is. The point of a cut and reverse is to gently mitigate some of the previous losses by taking advantage of a regime change. So I'm not like martingaling and like throwing on 2 times or 3 times the amount of risk to hopefully try to win my money back and extra. No, it's just like very gentle loss mitigation because I'm fully prepared that in all trades that I take, I do not have the expectation that it is going to go to TP. That is irrational. Now, it makes sense because, okay, like, okay, sure, I get it. Positive thinking. You should take trades that you think are going to win. You want to take good quality trades. Okay, sure, I get it. But, like, if your stats show that you have like a 58 or 59% win rate, right? It would be irrational to set expectations of the trade winning. When you're flipping a coin with a 50% win rate versus a 55% win rate, over the previous 10 coin flips, it doesn't really feel that much different. It only feels different after you've taken like 300, 400 trades and you're looking back over the, literally, over the previous 300 trades. Then and only then can you really feel the difference of that 5% edge. But like over a 10 trade window of time, you won't feel that 5% edge. You really won't. There's just way too much variance. And I'm talking, and the reason why I mentioned 10 is because I personally feel emotionally stimulated, like where I get emotionally stimulated is based on the results of my previous 10 trades. Because beyond the 10th trade, this is like the limitations of my short-term memory. Actually, I would take that a step further and say like I would probably have because I'm human and because I have recency bias, I probably give a lot more weight to like the previous 3 trades. Um and then after the 3rd trade, I would give it less and less weight. Yeah, but I would say like yeah, the most previous 10 dictates like my baseline, I wouldn't say baseline mood. I wouldn't say baseline attitude. I don't know what the right word is. But like if I've lost 9 out of my previous 10 trades, it's very human of me to not be in the greatest of moods when sitting down for the next trading session. I'm not saying I would be depressed, but it's like it would make sense for me to be slightly below baseline rather than a robot and perfectly at baseline at all times. Right? It would make sense. It would make sense. Wow, it's really starting to like compress again. By the way, not a fan of drawing triangles and doing wedges for your TA. I'm just trying to visualize that like this price action is weird. It's like it compresses, it does one really small leg, and now it's stuck compressing in a really small range again. This is again just like another point of confluence that perhaps we really are shifting into a mean reverting environment. The thing that I would just prefer to see, of course, is ideally it just continues to mean revert to the downside, and it just keeps bleeding to the downside, but in a choppy fashion. That's what I would like to see. But the first thing for that to really start to occur is, well, I'm going to need a break of structure first. And if it just keeps doing this, no fun. If it does something like this, really no fun and a red flag. I wonder how streamers do this, man. Like, what topics could I talk about? While a trade is unfolding. It's really challenging because I'm just drawing mental blanks here. Because my attention is more on the trade playing out rather than me thinking about other stuff. So like me actively trying to think about other stuff while in a position, it feels like there is this kind of friction in my mind when I actively try to think about another topic. It's like the chart is like a magnet and it's pulling my attention towards it. And it's very hard to pull attention into a different kind of direction because this magnet is so enticing because there are stakes on the line. There's money on there's money on the line. There's risk here. And I have a tendency of monitoring when I monitoring something or having more closer attention on something where there is a risk. And I think all humans do. But yeah, the size of these candles looks atrociously small. It's literally just stuck in like whatever this is, a 1% range, 2% range. It's just ping ponging between these same, like the these lows and like this high. What a range. Crazy. An average volume now? Oh, look at that. Less than 100K per candle. Oh. All right. So, given all of the circumstances so far, we have 30 minutes until the funding payout. We've been in the position for about an hour and 24 minutes. We are offside. The most onside that we ever got in this entire position is 0.3 R. And it's been, yeah, 1 hour and 20 minutes. 1 hour and 20 minutes. The volume has decreased to the point where over the previous 5 candles, it's just barely like 60K. Look at the size of the candles as well. Dramatically smaller than normal. It's just stuck and it's compressing while I'm offside. The trade really isn't looking that good. And for that reason, whenever my level of confidence drops in the trade, what do? I want to de-risk, right? How confident am I in this trade? Well, not so much. Not as much from the point of entry. Okay, what am I going to do about that to express this loss of confidence? Well, I'm going to grab my stop loss and I'm going to slightly tighten it because I want to at least, at the bare minimum, reduce my slippage risk. So now I've got 600 USD of risk on the trade. Not too shabby. That's fine. So if I happen to get bamboozled by the market today, the total P&L will be about minus 1.2. Because in the previous trade, before I reversed, I got a minus 500. Oh, okay, my bad. So it'll be like a minus 1.1. Okay, so end result would still be about minus 2% worst case scenario, which is the normal amount that I like to risk uh, per situation, I guess, per trade opportunity. And I view the reverse Like, yeah, the cut and reverse is a separate trade, but it's like it's based on the same concept. I view it almost like um a specific way of managing an active position. Because with managing an active position, there's really only two inputs that you can do. You can either increase your risk in the trade, or you can decrease your risk in the trade. So I de-risked to the app like I de-risked this long to the absolute extreme, such that my delta went from a positive to a negative. Delta just means like, okay, if you have positive delta, it just means you're long. If you have negative delta, it just means you're short. If you're delta neutral, it means your current trading portfolio is not directionally affected uh, by the market. So you could either A, be flat, or you could B, be perfectly hedged. Flat just means you're not in a position. Perfectly hedged means you're long somewhere and you're short somewhere else, and they cancel each other out. So your P&L remains as zero, right? But wow, look at these candles. That is ugly. I have like a lot of reason um, to consider looking for the cut because this is like terrible, atrocious looking price action, and I'm glad that I could capture this. I'm glad that I could capture this because the reality of trading is that um, not all of your sessions are going to be all nice and dandy, smooth, A plus setups which play out perfectly for you. Sometimes a whole bunch of weird shenanigans and regime changes happen. This in of itself is probably potentially a regime change. So I'm just gonna flag that there with the vertical lines. Oh, by the way, this is actually something I've been doing for a while now subconsciously, but I never actually like tracked it as like a proper habit, as like a proper thing of my system, which is I love using these vertical lines and also drawing with the ghost candles to help me visualize potential changes in regime. It just makes it a little bit easier for me and my eye. I'm not saying this is the best way to do it. I'm just sharing, hey, this is what works for me. This is this is what vibes with me, or what I vibe with. The closer we get to this funding, the more ugly it's gonna get. And the payout is every 4 hours. Okay, okay. So the last time it paid out was 16. What did it pay out previously? I'll just let that load in the meantime. I get so much more lag when I'm recording. Okay, what? Okay, so apparently in the previous funding rate, which was 4 hours ago, roughly, or 3.5 hours ago, sorry. Yeah, 1600. the funding rate was actually fairly normal. Just 5 basis points or 6 basis points, if you want to round up. Or round down, my bad. Um, or round up. What's the correct word if it's in the negatives? Whatever. It doesn't matter. You get what I'm trying to say. 6 basis points for funding, which is actually really small. And now it's 95 basis points. Interesting. So this is actually going to be the first funding round, like the first big funding payment since this point. Interesting. Interesting. Really is looking ugly. Really is looking ugly for me on this one. But yeah, I'll look to commit and I'll start wiggling. I'll start wiggling my way out of it. As price. Oh, sorry. As the funding rate timer starts to go down. But again, I just want to be mindful of the concept that before funding, shorts can just be closing out just purely out of not wanting to have exposure to needing to pay that funding payment. And the question for me, like at on every single candle, I basically have to ask myself, like, do I want to stay in? Do I want or do I want to get out? Do I want to stay in or do I want to get out? On every candle, technically, um, subconsciously at least, I'm asking that question and also answering it on every candle close. Like I'm not consciously doing it, but I'm subconsciously doing it. Um, And yeah, for the funding rate payment, the question is like, do I really want to stay in and pay 0.1 R just to be stuck, just so I can stay in the trade for an extra 30 minutes before hitting my maximum timer? Probably not, right? Probably not. That seems absurd to me because the trade isn't really playing out in the way that I want. So why would I pay a funding payment to stay in a trade that isn't even isn't even on side? It doesn't make sense to me. Why would I increase my risk on a trade which is not playing out in the way that I want it to? If it was playing out in the way that I wanted to, for sure, I would love to increase my risk. And this is not on cut and reverse trades, by the way. This is like, I'm just talking generally speaking. I won't get into the specifics of like when do I add. Actually, the only time that I really add that I love to add is when I have like such a blatantly good A plus setup that I'll look to add. So if I've got like a huge duration of regime with increasing volume and a really clean grind into the level, uh, a lot of high margin, like very high margin of error, directionally shown for both momentum and mean reversion, like in a specific direction. That's when I get really, really, really happy to add. Like when I've got all the stars aligned, which doesn't happen often. But when it does, I'm going to be looking to add. But boy, does this price action look disgusting. We've got about 20 minutes, and the volatility is pretty much garbage, so yeah, I might have to really consider like just trying to wiggle out with limits. I could close like 10% of how much. Okay, I've got, what is that? 90K contracts. I could start closing like 9K contracts. Or what is that? 4.5K contracts every minute to de-risk my way out of this. Yeah, I'm probably gonna do that. I don't know why it says. Oh, there we go. Okay. Yeah, I'm gonna look to close like 9,000 at a time. Because whatever price ends up being at the time of funding, I won't really care because I don't want to pay this funding. I just want to get out. So I might as well just start partially just wiggling my way out of this now. Because I don't want to be in a situation where I'm stuck with 90K contracts 60 seconds before the thing closes and there's a whole bunch of shorts which are slamming market buys and chasing the book, and I'm now competing with everyone to try to close out in the last 60 seconds before the close. Like, no thank you. I'd rather start just wiggling my way out now. So I'm just going to gently start working my way out on the book. And I'm just going to do this by... Oh, what's going on there? Why is it insufficient? Oh, because I need to close the TP. All right, there we go. Oh, and my bad. I needed to be clicking the bids, not the offers. All right, so we got a little bit of a de-risk there. I'll start going for the other one for the next one. When this gets to 16, I'll start closing out with the rest. By the way, this isn't like always how I manage how I wiggle out of these like longer duration trades. It's just I have to be mindful that I'm working with massively decreasing volume, and the volume now is like significantly lower than what it was before. So my slippage risk naturally is also higher. And because of that, I want to gently work my way out of the position rather than very forcefully slamming out of it with a huge order and slipping the book. I'd rather do something like this and just get like an average exit of, I don't know, somewhere around here. And at least that way, with getting screwed like this, the damage isn't going to be that bad. And by the way, if you play cut and reverse trades, this is something that you have to get used to. And that is the idea that not all of your cut and reverse trades are going to win. Sometimes you're going to be put in situations where the original trade ends up losing, it gets stopped out, you go for the reverse, and it just starts turning in the complete opposite direction as you originally intended. This doesn't necessarily mean that there was a mistake on your part. Not necessarily. It's just that it's a statistical inevitability. Meaning, no matter no matter how good or how much skill you have as a trader, a certain percentage of your it would make sense for a certain percentage of your trades to play out in this specific way. It just makes sense. It makes sense. All right, let's start closing out of the rest. Just gonna throw another one on to chase the book a little bit more. Whoa, was that one instantly taken or what? How much do I have left? I don't know what happened with that one. Maybe it didn't go through. Oh no, it did. Okay, cool. I mean, we've got 10 minutes to funding. Oh, 13 minutes. Pardon me. Still just looking to wiggle my way, like gently wiggle my way out of this one. Alright, we've got like the last 0.1 R of the trade remaining. We've got 10 minutes to funding. Let's wiggle out of the last batch. If this gets to like 1 minute before funding, I'm just gonna mark it close out of it. Alright, cool. We're out. Fully out. Let's check the position history. So let's see. Let's assess the damage. Let's assess the damage. So first long, minus 500, and then the cut in reverse, minus 315. So total P&L, minus 8, what is that, 816? Not too bad. That's actually less than 2, yeah, that's less than 2%. So, cool. It's like it's closer to 1.5. It's closer to 1.5. Let me just check that. What is it? 1.6. Yeah, 1.6%. Cool, not a problem. Yeah, okay, cool. I guess I'm gonna wrap up there, but yeah, I think that was a good recorded example of things not going to plan and trying to do the best I can with damage control. Now, at this point is usually where it would make sense for me to just wrap up the session because it wouldn't make sense for me to just go harder and try to push in an environment where I could just be potentially a little bit out of sync. I was, first of all, expecting continuation, but my idea was invalidated. I bet on the market regime changing and for this thing to collapse based on so many other of these staircases completely collapsing, like very violently to the downside. But it ended up not happening, unfortunately. The volume died out. We went into Chop City. Is what it is. Trade duration exceeded the, or went fairly close to its maximum amount of time that I allow it, which is 2 hours or so. I had to cut it at 1.5 because we were getting close to the funding rate. But yeah, it is what it is. Um, I stuck to the plan. I didn't really deviate from the rules. I was really aggressive. Like I will say, I was really aggressive with this mean reversion long, with this original mean reversion long. Um, but I think it's justified. Like I would take this again. This is fine. On the left hand side, it looks really in sync. It didn't hit a big key level yet before it ended up reversing. So I'm actually okay with this. I would still take, like, 9 out of 10 times I would still take this. And then the reverse, also 9 out of 10 times I would still take it, considering I have some kind of short-term-ish bias to seeing these staircases resolve very violently to the downside. Like I've just seen this happen over and over again. Fortunately, I can't remember the name of the coins of where this happened, but I have been seeing this happen. And I've mainly seen it happen after price tags a level. Maybe the error for going for the reverse here, it probably was an error because usually I have a lot more confidence with going for these when price hits a level. But I still went for it because the original trade, it went offside pretty much immediately. The structure on the left was super clean. The way the price was approaching to the downside was really clean. So I was actually pretty happy. I was pretty happy with jumping into it. Overall, in terms of mistakes, so what could have been better, I think the way that I wiggled out of this trade was fine. I think there was no issues here. The way that I wiggled out of this first one, there is the argument. You know what? What I didn't do is when price broke this level, what I should have done is begin tightening my stop loss, but I didn't do that. At least I went for the cut and reverse, right? And I got some kind of exit over here. So I think that's actually fine. Like it's not the it could have been better, but it's not the end of the world that I got my exit somewhere down here rather than up here. It's not like the biggest end of the world, right? It's not. Sorry, it's not like the biggest deal. It's not the biggest of deals. And then yeah, with the cut and reverse, I also don't think this is that big of a deal. Um, it was like slightly concerning that price wasn't breaking this point 10. But then again, it was like cleanly bouncy ball patterning to the downside, as in like the bounces were getting weaker over time. It's not like there was a bounce and then a bigger one and then a smaller one and it was all over the place. Like this looks like a fairly clean, like it looked like one of these. which I've noticed often resolve with like something like this. Not all the time, not objectively speaking, but this is like, okay, we have a really clean, slow, grindy staircase, and then randomly out of nowhere we have market structure breaks to the downside, and then it hits some kind of level, and it's stuck there, and then the thing just starts like violently collapsing, and with stop loss and liquidation cascades. So yeah, in terms of errors, I don't actually think I made any particularly blatant ones. All right, I was just like, just thinking, like, was there anything else that I potentially missed? No, I don't think so. Yeah, there's the argument that maybe like trying to scout this tiny range and go for the reversion plays here. Maybe there's something viable in there, maybe. But like honestly, I'm really not a fan of scalping ranges where the size from the low to the high is like 3 candles. Not a fan of that. Like I would not be a fan of trying to buy these lows and sell these highs. The reason why is if volatility just so happened to return back to normal and the volumes just so happen to return back to normal and there's a huge spike either to the upside or to the downside, not a pretty resolution. Those ones can end really, really, really violently, and it's actually from trying to take advantage of these tiny ranges where I've actually been slipped horrendously. So I just simply don't do it anymore. Um, yeah. But yeah, I think I covered everything there. You know what I'll do? I'm just thinking, should I stay on and show how price resolves after the funding rate? Nah, there's no reason to. It's none of my business what price does after I exit. I can always review it later in my next session, but I don't really need to look at it now. I'd rather just wait for the next trading session to begin, open the trade screenshots, like these old trade screenshots, go back to them, take a look at them, and see how the price action actually ended up unfolding. But yeah, I think I'm going to wrap up here. I think I covered as much as I could. I'm glad that I could show a loss, and I'm glad that I could show a more challenging change in regime and how I play it. Because yeah, the reality of trading is that not all of your trades are gonna go your way. All right, if you're still watching at this point, thank you so much for watching. If you have any questions at all about the 2 trades that were made here, or just any trading related questions in general, just drop your questions in the comment section below. Don't be shy because I will be answering to every single one of them. This helps with the algo so much. You don't have to ask about this trade. You can ask about anything you want. And yeah, I will actually do my best to get back to you in a video format. Like if you ask me something, I will make a video trying to address your question rather than just giving you like a basic text reply. So yeah, if you're interested in that, if you're interested in getting high quality replies to your questions, drop them in the comments. But yeah, if you're still here, thank you so much for your time and attention, and I will see you in the next video.